do you want to take us a little stroll through what you think of the good things about CARF and give us a little bit more detail of CARF?
Okay, so sure. I think you have partially spoiled my presentation, but anyway, allows me to make some storytelling more.
Well, I'm not spoiling something, I'm not doing it right.
No, that's great. So basically, we are right here and we are talking about CARF today because the emergence and the rise of crypto assets have created challenges for policymakers and tax administrations. Particularly, tax administrations now struggle to get the full picture over taxpayers' activity in this new crypto market. And if we look at this issue more broadly, it creates concerns for global tax transparencies. Why? Now it's more difficult for administrations to assess whether tax liabilities connected with crypto and related income are appropriately reported, and ultimately this increases the level of tax non-compliance in this space, which is estimated to be very low. In addition to that, we should also consider that the crypto market has given rise to a new set of intermediaries. These are crypto platforms, crypto exchanges, wallet providers. These intermediaries didn't exist before, and actually they are very different from traditional financial institutions that are subject to existing tax reporting regimes, such as the Common Reporting Standard that was mentioned. Indeed, the Common Reporting Standard, which is the first international standard of tax transparency, is not able to capture income and transaction in crypto assets as it was designed to apply to the financial sector. And actually it mandates the exchange of information on financial accounts and the financial assets held with financial institutions. So there is no reference, there is no inclusion of crypto asset service provider for the moment. So this is the big picture, and if we combine the rise of this new phenomenon, the crypto market, with the scope of existing international standard on tax transparency, we do realize that a transparency gap comes to the surface. And against this backdrop, the G20 back in 2020 or 2021 mandated the OECD to develop a dedicated tax transparency framework, which is now the crypto asset reporting framework that was developed by WP10. And actually there are people here that were sitting by the time of drafting the rule in the WP10. I wasn't, unfortunately. And the idea was bringing into the scope of the automatic exchange of information a crypto transaction with the objective of closing this emerging gap, this transparency gap that was emerging in the crypto market, and providing tax administration with data to detect and address cases of non-compliance in the crypto space. And now we are here. Building on this premise, the CARF was developed and adopted in 2022, and it, much like the CRS, it revolves around 4 building blocks. The first is the scope of assets that are covered. These are crypto assets that can be used for payment or investment purposes. Then there is the scope of intermediaries subject to the rules, as well as due diligence procedures in order to onboard, identify reportable users and reportable jurisdiction. And last but not least, we have the scope of information that should be provided under the framework, along with the crypto transactions that are relevant. These are mainly crypto to fiat, transfer of assets, as well as staking and additional reportable retail transactions. So on this premise, the work of Working Party 10 was not limited to developing the rules, as also the international architecture to make the framework operational was built up, and I'm referring to a legal instrument that can be used by partner jurisdiction in order to activate exchange relationship. That's called CARF Multilateral Competent Authority Agreement, and that, as I said, will be the legal foundation to undertake exchanges under this new machine called CARF. There is an additional element, IT language, that will be used by tax administration to transmit data and exchange information under the CARF in order, to have everybody speaking the same language. And so, in summary, concluding, this is this new wild animal, the CARF, and it will equip tax administration with useful data to better address and enforce tax compliance on crypto, making sure that crypto are no longer a blind spot for administrations.
Perfect, thank you, Marco. So we're going to move to now Colby, who spoke about his position in the Global Forum. So we've spoke about CARF, we've talked about coming in. How does that then get across the world?
Yeah, exactly. Good question. I mean, it's still working its way out slowly, right? Slowly but surely. But I mean, like, first of all, I just want to say, like, whoever, I guess, I don't know, Dion, was it you or maybe Michelle or Max who put the agenda together? Like, chapeau, because I really love coming after the previous panel. Like, I think this is a perfect segue because basically I think the previous panel was talking about something that was very important, which is regulatory development. And I think it's something that for me is one of the reasons why I think I've stayed in this space for so long working on this stuff is like for crypto, we're building everything from scratch, right? And so on the regulatory side, we've got all of these rules that are coming out and basically countries are going around the world and trying to think about, okay, like what is it that we want to promote in terms of the crypto space? What do we want to reject? What do we want to, like how do we want our crypto sector to look like? And I think every country around the world like recognizes that it's its own right to basically make those decisions and figure out what do we want to promote, how do we want our crypto sector to look, right? And so I think that's really important, and I think the word that was used in the last panel was balkanization, right? There's differences, different outcomes, and like kind of some competition, I think, amongst countries right now. So that's what we're seeing on market. Now, to get to your point, Dion, about like what is, I think, the sort of, what is the sort of global look on CARF, I think here, this is like a very different set of rules, right? So whereas we have like for market regulation, we're talking about how we promote certain types of actors or maybe, you know, disfavor others. For tax transparency, and I think also for AML, it's a very different approach. Countries basically came from the perspective of saying, okay, there are certain things that we expect as minimum, like amounts of information that have to be in existence if you want to have a crypto asset sector in your country, right? So like if you want to get into this game, if you want to have a legitimate crypto asset sector in your country, then the global community has basically you know, taken all of us into a windowless basement in the OECD and locked us in there until we came up with rules on tax transparency and at the FAT if it's the same thing on AML, and said this is what has to be in place. And I think that's very important to like just reiterate because that's why I think when you look at the CARF, it's like one set of rules, very detailed rules that everybody is going to be trying to implement in the same way. And that's very important to distinguish it from market regulation, which is just going to change from jurisdiction to jurisdiction based on political considerations, et cetera. So at the Global Forum, how do we like make that a reality? So basically, I think one of the things is when we think of from like a government's perspective, like how do they even get to the point where they're going to send vast amounts of taxpayer-sensitive data and exchange that with other tax administrations all around the world every year? Like, how do we get to that point? That's very kind of fanciful almost to think that governments would do that. But in reality, it's something that they're willing to do because the processes of the Global Forum sort of put expectations, common expectations, and trust amongst governments, and governments understand what they're signing up to. So basically, the Global Forum, what is it? It is it's a independent organization that sits within the OECD, but its membership is much, much broader, right? So the OECD has around 40 member countries, I think, right now, and that's, you know, historically it was sort of, you know, Western European countries, the US, it's expanded a little bit in recent years, but the Global Forum has 172 members, I think, and so it's just basically a much, much broader organization, and it works truly globally. And one of the things I think that's very important with the Global Forum is it was a very principles-based sort of approach towards getting implementation across the line, and so basically some of the work that we were doing with our members at the Global Forum was kind of coming up with what are the common principles that jurisdictions have in terms of expectations when they exchange CARF information. So if they agree to exchange CARF information, then what can they expect in terms from their partner, right? Making sure everybody understands that. Then also, what's the expectation in terms of implementation? Like, what are the laws that you have to have in place? And like being very precise about making sure that everyone has implemented the laws consistently and making sure there's a mechanism to review that, because that gives everyone the assurance that the data that they will get is going to be consistent, right? Because if someone's law is different on this point than that other jurisdiction, your data is going to be inconsistent, and that's not going to work well either. And then the final thing that we do, I think, which is also really important, is making sure there's a level playing field. So part of that goes back to the fact that like there's 170 countries in this organization that we can work with directly, so that's really helpful. But also we developed a process that basically it's an annual annually reoccurring process that goes around to identify relevant jurisdictions. So that basically means what are the jurisdictions out there that need to be doing CARF exchanges, implement the CARF and exchange that information in order for it to work. Because obviously this doesn't work if some major crypto sectors don't want to participate, right? So there's a process there that all jurisdictions have agreed to identify that on an occurring basis. So that's kind of the framework that I think that we set out and the process that we've done to take it forward. And just to conclude, I think the success is basically the fact that we have 70 jurisdictions now that are looking to do this either in 2027 or 2028 first exchanges for CARF, and so I think that's a pretty good track record in terms of where we've gotten to today.
Brilliant. So now we've gone from the creation in a windowless OECD basement, I think you called it. That is, when you're in the negotiation rooms, that is how it does feel, in all fairness. It really is. How it gets across the world, and now we come to the UK at least, for HMRC. I mean, you've just got your guidance out now and everything. So a really good example, obviously, falling behind Finland, clearly, but a really good example of how you can actually communicate what's actually needed. So, Simon, do you want to give us a bit of a positives on that?
So yeah, thank you. I think to some respect, yourself and Marco have outlined the reasons for introducing the CARF. I mean, I think it's transparency quite clearly. And the UK has been a fairly early adopter of transparency measures throughout. I think this is the third one I've been involved with. So, we get in at the early doors and we implement them as best we can. I think for the CARF itself, the benefits hopefully are fairly self-evident for a tax administration. It is about getting visibility on the crypto asset users, hopefully addressing perceived tax gaps and tackling potential non-compliance as well. And of course, the benefit of the CARF is it's international. For us, we will be getting data from up to 70 countries in due course, hopefully more as the CARF slowly ramps up, like the CRS. It's not going to be a once and done thing. That's just not going to happen. Countries take time to adopt and implement for whatever reason. So I think from HMRC's point of view, getting in early, getting that information. Of course, we're also implementing the domestic reporting as well. So we'll have reporting on UK taxpayers as well, and we'll be getting that from the same time. So for us, I think the benefits are pretty clear in terms of what we hope to address, getting visibility on taxpayers, but also hopefully helping taxpayers pay the right tax as well. I don't think we should sort of forget that. Dion laughs, but that's a thing. And then just generally on the CARF, I think, and I see quite a lot of faces that we work with on our working group. Hopefully the UK has been inclusive and working with RCASPs and trying to be open in terms of where we are, what we're trying to do. As Dion says, we've just published our guidance, a little late if I'm honest, but it's out there. Many of you will have commented on that, and we've fed that into our guidance. We'll be looking to update it in due course as well. So I hope that gives an idea of how at least the UK has interpreted the framework, what we expect from UK RCASPs, outline the due diligence rules and things like that. So I think we're in a pretty good place. We seem to be one of the pace setters in terms of this, and I think there's both advantages and disadvantages perhaps to that, but we're doing it. So I guess we'll learn from it as we go on.
I'm not the only one laughing, Jesslyn, the one's amusing as well. And I only laugh, but it's true. The information that's being provided by RCAPs doesn't just help tax administrations, it should also help individuals sort out their tax affairs. And, that is actually very important to make sure that they get it right. If you obviously need any help or need a further understanding about what happens in a tax investigation. But this sounds also positive at the moment. It really does, but come on, there must be something that's keeping you all up at night on this. So, Marco, what's keeping you up at night?
I wouldn't say the CARF is disturbing my dreams yet, luckily. But if I had to name a couple of issues revolving around CARF implementation, they will definitely relate to how fast the market is evolving compared to how international standard can and should adapt. And the first issue is tokenization of financial instruments, as we have seen a massive adoption of these tokenized and even digitally native financial instruments. These can be stocks, bonds, and other traditional financial instruments that can be either tokenized, so brought on chain, or alternatively, they can sorry, I lost my mind. So the tokenization, tokenized financial instruments and digitally native financial instruments, often referred as security tokens. In this respect, if you apply the current rules, they will be subject to both the CARF and the CRS, and actually there are optional rules for financial institutions to switch off the reporting under the CARF whenever these instruments are reportable even under the CARF. And in this respect, the industry has requested for a simplified reporting treatment in a way to exclude the application of the CARF and just report these instruments under the CRS, and we know it very well. Discussions are still ongoing, so there is no definite answer yet, but it's very important in this context to really carefully identify these use cases in order to avoid any spillover effect that may undermine the entire system. There are no answer yet. Another point is the qualification of stable coins, the so-called SEMs, specified electronic money products under our CARF. These are essentially fiat-backed stable coins that meet a number of conditions. And actually, we are now reflecting on how to assess these conditions, specifically the condition requiring for a full redemption right. This is something that comes from financial regulation. Actually, MiCA, if you look into it, there is the same regulatory requirement in order for these products to grant a redemption at par value at any time to holders. And this is a question very relevant for multi-issuance stablecoins, meaning those stablecoins that are issued by different entities across different jurisdictions and potentially subject to different regulatory requirements. So there is a question that if I test this condition against one of the issuer based in a certain jurisdiction, I can get to different reporting outcomes and qualification. And this is something that nobody wants because it will undermine the legal certainty of the entire systems. And so that's it. Stable coins, needless to say, it's very important to have a correct treatment given the relevance of the market and also considering the fact that whenever these products fall under this qualification, they are carved out from the CARF and they are subject only to the common reporting standard. This means that administration will get less detailed information as the CRS mandates for an account balance reporting, which is different from the transactional reporting of the CARF. And in addition to that, there are also certain jurisdictions that have not implemented the CRS, and hopefully they will implement the CARF. So maybe this jurisdiction, when you transition to the CRS, they will not be able to exchange information under the CRS. While they could do it under the CARF. So, all these are important points to be kept in mind.
Yeah, and as we're not at the US Embassy, we can actually say the US would be that one. That is the problematic one.
No.
And so much the fact that they don't do CRS, and so if you don't capture the stablecoins under CARF, we would get it under CRS or DAC2 if you're in the EU.
Yeah.
But in the US, because they don't have CRS, they have FATCA, would it actually be caught under FATCA? So it does start to create a whole sort of other set of issues with that. And again, this is another thing with stablecoins. It's not as simple as you might think. The regulations only get you so far, but there's a whole host of other things, tax, accounting, CARF, that also need to be taken into account. So, Colby, what's keeping you up at night?
Yeah, besides my 16-month-old son. Yeah, I think, this is it's a really good point because I think one of the other dangers of being locked in that windowless basement room in the OECD, beyond maybe, I don't know, contracting scurvy or something, is that you sit there with all these other wonderful, colleagues from around the world and you work on this great standard, it's a CARF, and you get to the moment where it's finalized and then everyone claps and they pat each other on the back and they say, wonderful, great, we have this perfect standard, and then you leave the room and you actually have to make it work. And that's the really hard part, actually. And so for me, I think making it work, there's two things that I'm concerned about, or that I would focus on. One is making sure that there's a common understanding of just key market definitions and terms, but also how the CARF works and across both governments and private sector, right? So I think there's a need for sort of education and awareness. Now at the Global Forum, we actually did, we've started already to develop sort of training programs for government officials and tax administrations, and that's really important, not just so that they understand how CARF works, but also how they can use the data once they get it, they can understand how this is useful for them. So that's one thing. Also, making sure that private sector is aware that these obligations are coming up. I think that's, events like this are a perfect way of doing that. And then I think the other thing that I am I always kind of think about as well is that when it comes to actually making this work, this is going to be a whole of government. There's going to need to be a whole of government approach on the public sector as well. CARF information is going to touch on really important aspects, I think, of AML as well. And so it's going to be important that regulators talk to each other, they talk to the tax authority, and they work together in a way that maybe wasn't always the case when CRS was rolled out.
And I think that use of the data is the important part that the Global Forum really brings in, because some administrations might get the data and not do anything about it. Obviously, in the UK, we've had some challenges for CRS information being used, which was the case led by Mishcon de Rea, whereby they were trying to argue that it was improportional, there was no proportionality to getting the information onto CRS, but HMRC was able to evidence that they did actually do something with the CRS data. Therefore, it was proportional. So you could have situations, if that hadn't been in the UK, and HMRC being so forward-thinking and using the data, if that had been somewhere else, then that could have put a whole challenge on proportionality of CRS. And so CARF has the same challenges. We have to make sure that people actually use it.
Yeah, and maybe just to follow up on that, one of the other things as well is educating. So, for instance, regulators or AML authorities about the existence of what CARF information will be and how it can be of use to broader government uses as well. And I think obviously each jurisdiction has sort of conditions and limitations about how that kind of information, how CARF exchange information could be used within the government. But to the extent possible, it can be very, very useful for instance, for an AML authority or for a regulator that's trying to run an investigation to be able to understand. Having this sort of AML KYC information or the transaction information from the CARF, it's something that they may not otherwise have access to. So it's kind of potentially a game changer there as well. Yeah.
And talk about the change in the game then, Simon. So the data, what's keeping you up at night?
Well, like Marco, I'm not sure the CARF is, but every day is a challenge, I suppose. We always have something going on. But I guess two aspects I'd highlight, picking up on Marco's point. I think from a policy point of view, it's not particularly satisfactory to go into an implementation of something like the CARF with big issues outstanding, such as the ones highlighted. I don't think that's anyone's fault. It's a factor of the sector. It is what it is. So how we deal with that, I think, is important, and we will look to do it multilaterally and work with stakeholders. So I think that's a sort of a first reflection. I suppose a second point I'd highlight is around perhaps moving away from RCASPs and reporters to the actual people who are going to give the information to those RCASPs, the crypto asset users. Because I hope in the UK we have a good idea of who our RCASPs are. Fingers crossed, hopefully we do. But in terms of the users, there's millions of them, and there's millions in other jurisdictions as well. And RCASPs will be asking them for information of the ones that are already on their books now, and also future ones as well. So one of the things that we've been thinking of is how we as a tax administration reach those people. We've got a comms plan in place. We've recently done some social media on that, and a little bit too early to sort of get any sort of granular information, but take-up appears quite good. Prior to that, we did a press release which again outlined what the requirements were for. And because that was a little while ago, we've been able to do a bit more analysis as to how that landed. And I think the reactions have been extremes, essentially. So we've had, on the sort of negative side, we've had people on various forums say, well, it's only £300, who cares? I'll pay that and I won't pay my tax. HMRC will never catch me. Other times it's things, well, I'm just not going to give my details to the RCASP. Again, they can't catch me. But also sometimes it is just, I would say that's sort of willful misunderstanding. Sometimes it is just misunderstanding in terms of, would this penalty apply to every time I make a transaction, and things like that. And through to the more compliant side where people are saying, okay, fine, that's clear, we understand. So that's given us sort of pause in terms of, is our messaging right? Are we actually reaching out to those crypto asset users, because they are as much an essential part of this as the RCASPs? And I think obviously a lot of our focus is on the RCASP. That's who we typically engage with. But for us as a tax administration, reaching out to those users and I guess gauging how much the awareness is amongst users of the CARF and how willing they are or otherwise to give their information is going to be key.
Brilliant. So Juho, are you being kept up late? No, apparently no one else is apart from Colby's 16-month-old. Surely you must be getting plenty.
Yeah, I had to say. And thank you, Dion, for letting me speak to you. Yeah. About the fast pacing, so the guidance part is on me, and I'm just sitting on it, so not yet ready. So that's about the fast pacing. And Simon, thank you for the communications idea. So in our country, we have focused on communication to our future service providers who will be getting the information, but the crypto asset users, that we could use as our advantage and take the communications to that side. But the things that keep me night, I would have liked to say 5 things, but now we do not
go for it.
No, we do not have time for that. But the first thing, of course, it's the legislation. So just yesterday, as a member state, we need to implement the directive. So yesterday I checked out of 27 member states, 2 had transposed the EU law to their national law. So a lot of things to do, and we should be applying the directive 1st of January 2026. So quite a hurry. Even though it might not give the full pictures. For example, we have almost everything ready, just the president's signatures, and our legislation is done. Second things, it's a guidance. OECD has launched quite a lot of guidance, whether it's commentary, whether it's rolling out FAQs. But in my opinion, the tax administration should also step up. So give the guidance their service providers in their own language and have personals who think and know about CARF and DAC8 and give that support to their domestic service providers. And third, the biggest challenge which was touched upon was the effective use of the data. So we, as a quite evolved jurisdiction, we know how to use the data, we know how to obtain it before this automated exchange part, but there are a lot of member states, at least, who do not know how to do this. The only visibility that they might have is what their taxpayers are declaring in their tax declarations. And now the tidal wave of information is coming up to them, and they are like, what are we gonna do? We do not have the resources, we do not have the personnel, we do not have the tools. And I cannot advertise anything, but the co-hosting Taxbit and other software product or service providers, jurisdictions or tax administration, they need to use services like that. Otherwise, they cannot show that they are using the data, or at least not using it effectively. And if they cannot show it, how can we justify these reporting frameworks to the business side?
And I like the shout out there, because it is true. If you can't demonstrate you're using the information, you can get a challenge, again, like we had in the UK with Michigan Direct. That could happen in any other jurisdiction. So.
And then I wanted to additionally highlight, in our directive, there is an article about effective mechanism. So we need to show that we have those effective mechanisms in our country.
Very true. So do we have any questions? One hand back there first. Sorry,
thanks. We've seen Switzerland and Canada delay implementation of CARF this week. I just wondered if you had any thoughts on whether that is a growing tide or, isolated incidents.
Like, just thinking about countries and how significant CARF is, I'm not surprised at all that countries are taking like an extra year to put this into place. And I actually think it's a good thing. If a country needs that additional time, then that's like totally fine. One of the things to think about though is that, and this is where the sort of global forum backstop comes in, is from the global forum's perspective, jurisdictions that are considered relevant jurisdictions need to implement the CARF at the latest by 2028. So jurisdictions hold themselves to that standard and they understand the consequences of not doing that. So I think that's something that's very important. But at the same time, I think it's also good if a jurisdiction says, okay, look, we need an additional year, then we're going to take that time to get the system right. And that's something that was sort of already understood in the Global Forum context when we were talking about timelines for implementation, because we understood as well, like, thinking back to the CRS, and when the CRS was initially rolled out, it was like 2017, 2018. Those 2 years were sort of considered first adopters or first movers, like equally. And that's basically what we're doing 10 years later, 2027, 2028 with the CARF. So I see that as like I think that there honestly could be like a few more jurisdictions that make that decision. But I don't see it as a bad thing. I actually think it's good if jurisdictions are awake and making those decisions and saying now is the time that we're ready.
Is HMRC going to push back?
Well, no, because it's up to. I mean, it's up to the jurisdiction, isn't it? I mean, I think Colby articulated what the process and the thought process might be going through those jurisdictions, and if that's right for them, then that makes sense. Does it cause problems for other countries? Yes, of course it does. The staggered implementation is going to be an issue. I believe it was an issue in CRS as well, so hopefully it's not something that we're necessarily unfamiliar with, but that's not to belittle what the problem might be. And I guess we'll just have to hope that we can sort of work our way through it and get some guidance out for people and for ARC as to how we deal with it.
Brilliant. And Juho, Finland still looking to go on time?
Well, we have the directive, so it's obligatory.
So we've done a poll of 100 available, of all the tax administrations, David, that are available, and 100% of them are still going ahead. So I don't see that as being a tidal wave just yet. Is that time? Or do you have time for one more? Or no? Nope. That is time. So if you may join me thanking Marco, Juho, Colby and Simon for coming along and presenting. But thank you very much.